Let's start tonight, however, with a bit of hydrocarbon news. Africa-focused company Tullow Oil has reported a fairly strong set of well test flow rate results, and it also doubled its estimates of the depth of the oil resources in Kenya's Turkana Basin, hailing its exploration program over there as being very successful. Now, in the first half of 2013's trading statement, the company also announced confirmation of a new oil discovery at its Etuko prospect in the southern part of the Lokichar Basin, and it says that the Sabisa-1 well in Ethiopia has also established the hydrocarbon system there is oil prone. The report for Tullow's Ngamia-1 well said tests had found a constrained flow rate of 3,200 barrels a day. That's more than a minimum analysts were hoping for, and doubled its estimate of net oil pay depth to 200 meters for the same well and 75 meters for another, Twigga South 1. Tullow sees a flow rate potential of 5,000 barrels of crude every day based on Ngamia-1 and Twigga South 1, and estimates there are about 250 million barrels of oil in place. But that, of course, could increase further after appraisal. Speaking of Ethiopia, work at that country's Grand Renaissance Dam is still firmly on course, despite controversy around that project all over Africa. Salini Construction of Italy is a main contractor. They say that the targeted completion date of 2017 will be attained. CCTV's Gurum Chala was at the site of what will be Africa's largest hydroelectric generating site, and he now filed this report.
1,000 kilometers away from the heart of Ethiopia and just 25 kilometers away from the Sudanese border lies the means of Ethiopian pride in the making, the Grand Renaissance Dam. The construction is indeed serious and supermassive. Invited by the government of Addis Ababa, representatives of the international media houses traveled to observe the actual work.
This is the construction site of the Grand Ethiopian Renaissance Dam. Now, the plan of construction is to connect the mountain I'm in to the other side, and in the middle, there you have it, the Ethiopian Grand Renaissance Dam.
And here is the row factor between Ethiopia and Egypt, the site where the Nile water was diverted for the construction convenience of the dam. All members of the international media houses witnessed how the water flow to the downstream countries was not affected.
You are witnessing now. We are not really redirecting the flow of or diverting the flow of the Blue Nile in another direction. We are not reducing the volume of water flow.
The humongous hydroelectric generating dam project of Ethiopia is being executed by two contractors. Salini Construction of Italia is handling civil works of the dam, while the local Ethiopian Metal Engineering Corporation is handling the hydro engineering works.
For our company, this is the most prestigious and important project we have now, and for us it's the top priority to have the best performance possible, because we understand how important is the project for the Ethiopian government and for all the people.
With 1,700 square kilometers of reservoir anticipated to be filled in 6 years' time to produce the 6,000 megawatts of electricity, the Ethiopian dam indeed has a long way to go. 2017 will be the deadline for the project to be completed.
The waters of the Abai River, which is coming from the Ethiopian highlands and flowing to the downstream countries, is said to contribute more than 85% of the Blue Nile River. Now, most of the downstream countries want to utilize this water for their developmental activities. Ethiopia, of course, being the front-runner country. Grumjala, CCTV, Guba, Western Ethiopia.
Now, the governor of the Central Bank of Somalia has denied allegations in a United Nations report linking him to irregularities regarding millions of dollars withdrawn from the bank. He's described those charges as malicious and baseless. In a report, the UN monitoring group of experts on Eritrea and Somalia, the Sanctions Committee, essentially said that $16.9 million of international aid transferred by fiduciary agent monitored by PricewaterhouseCoopers to the central bank. Out of that amount, $12 million of that simply couldn't be traced. The confidential report was seen by Reuters, and it said that the current bank governor, Abdusalam Omer, was key to these irregularities. Omer is a 59-year-old dual Somali-US national, and he says he has proof that out of that $16.9 million, almost all of it was deposited in an account at the central bank run by the finance ministry. Now let's throw up in some perspective on this developing story. CCTV's Mohammed Hirmoge is live in the Somali capital, Mogadishu. Miriam Bemard is live over in London. Thank you both for your time. Hirmoge, let's start with you. Has there been any formal reaction from the finance minister or President Sheikh Hassan Mahmoud?
Rama, there's been no formal reaction from the office of President Hassan Sheikh Mohamud and that of the finance minister regarding the monitoring group, UN monitoring group report that alleges that the central bank has been used to push private interest ahead of national interest, and that huge amounts of money have been deposited from the central bank to private accounts. But the person who responded to this today is Mr. Abdusalam Omar, the Central Bank of Somalia governor, who actually says, and I quote, "These allegations are baseless, malicious, and uncalled for." And he even challenges the United Nations monitoring group to call for an independent audit to establish the facts. He also says that for every transaction that puts money to central bank or withdraws money from central bank, there are always representatives from the Central Bank of Somalia, representatives from PricewaterhouseCoopers as an audit firm, and the Accountant General of the Federal Republic of Somalia. Therefore, until now, we don't have any other formal reaction from the government right here in Mogadishu.
Indeed. Miriam, this $16.9 million, some of it certainly came from your end of the world. What's the reaction been from donors over in the United Kingdom and across the pond as well?
Well, Rama, it's certainly alarming, and there's now more questions about the UN report, with the governor saying the investigation behind the report was flawed. The main concern for many investors here is the decision-making process at the central bank. According, of course, to the UN report, all bank decisions were made by the governor because there were no board members in place. The central bank also doesn't operate as a government body. This is what the report claims, which would have to abide by policy or oversight by a parliament or an independent body. Now, these are the issues that foreign investors want answers to, and how the government goes about dealing with this situation will be very critical. This comes at a very fragile time when Somalia is establishing a business-friendly legal and policy framework for foreign investment.
Indeed. Hirmoge, past reports from this same monitoring group, 2011-2012, have also pointed to lax financial management, financial impropriety by the transitional federal government of Somalia. What went wrong with their successor?
It's still too early to establish what actually went wrong with his successor, because the successor government is barely in office for 1 year now. It is September that the office of the president celebrates the first full year of post-transition administration right here. But then again, we understand last year the United Nations Monitoring Group report established mega corrupt deals that involved huge amounts, millions of dollars, to have been lost from the Central Bank of Somalia that has gone to private pockets. It's so interesting that last year I interviewed the current president, Hassan Sheikh Mohamud, who was then a political party leader and who indeed criticized the government. Therefore, it will be interesting to find out what the government has to say, what the president exactly has to say about this new UN monitoring report. Plus, we expect a showdown between the UN monitoring group report and the UN monitoring group actually and the central bank and the government of Somalia at large, because today the governor has said this is malicious, baseless, and uncalled for. Therefore, we expect the monitoring group to stand fit and to stand firm and actually corroborate what they're saying. Therefore, we expect quite a showdown that will indeed give more information on the malfeasance that has been there, if there has been one, Rama.
Indeed. Malfeasance or not, Miriam, past reports of financial impropriety really haven't limited donors from, rather stopped donors from increasing their engagement with Somalia. The IMF, for example, has just officially recognized the Somali government this year. So what are the odds really that this report will change anything as far as donor behavior is concerned?
Well, you know, many are hoping this report will actually prompt action on the part of the government. As was just said, you know, we're waiting to see how the government reacts to that. We have to bear in mind that Somalia was seen to be on the path to enhancing relations with trading partners like the EU. You know, just at the beginning of this year, Rama, the EU committed to helping Somalia clear its debt and strengthen international aid programs. In fact, the EU has funneled over 600 million euros into Somalia over the last 5 years as part of a three-pronged approach of defense, diplomacy and development. Europe has also committed 11 million euros to train Somalian soldiers as part of the EU's anti-piracy mission off the Somali coast. All of these steps have been taken as part of a long-term effort, and so certainly, you know, investors want to see how they can partake in that long, sustaining effort and investment in the country.
Indeed, we'll have to leave you there for the time being. We'll keep tabs on this developing story. Thank you so much for your time. CCTV's Mohammed Imoge in Mogadishu and Miriam Bamad in London. Now, away from that part of Africa, let's move on to the western end of the continent. Foreign investors have signalled an enormous appetite for African debt despite a recent sell-off in emerging market assets, at least if the recently floated Nigerian Eurobond is anything to go by. The $1 billion Eurobond was 4 times oversubscribed, according to Nigeria's Finance Minister Ngozi Okonjo-Iweala, who said that the result essentially signalled confidence in the Nigerian economy. Africa's top oil producer issued a $500 million 5-year bond at a yield of 5.375% and a $500 million 10-year bond with a yield of 6.625%. Now, the 5-year paper got bids of $1.77 billion and the 10-year $2.26 billion, according to a source who spoke to Reuters. By comparison, Nigeria's debut $500 million 10-year Eurobond issued in 2011 got bids worth 2.5 times the amount on offer. Time for a short break here on BizAfrica. Here's what's coming up next. Pulling out all the stops, Air Zimbabwe could be on the path to recovery following a successful high-price promotion. We'll be looking at that story in depth when we come back. At a quarter to the top of the hour, we're still keeping tabs on developments over in Egypt. Not much happening there. Still pretty much a status quo as it were. We'll keep you updated on developments from that end of the world. However, down in South Africa, the mining sector in Africa's largest economy looks set to see some stability as the country enters the so-called strike season. Now, the country's deputy president, Halema Motlanthe, is the government's point man. He's been tasked with resolving the tension in the mining sector, and he probably anticipated that would be somewhat difficult. Now, there's been one failed meeting followed by a series of smaller ones to find common ground between unions on one hand, which are demanding higher pay, and mining companies whose margins are being hammered quite literally by rising costs. On Wednesday, Motlanthe called the parties together for a roundtable and public signing ceremony at the presidential guest house in Pretoria. That, however, did not go according to plan. Now, to find out why that happened, let's now go live to CCTV's Angelo Coppola. He's standing by in Johannesburg. Angelo, all parties here, mining firms, unions, had essentially agreed to sign the pact except for AMCU. What happened?
Well, when we arrived there early in the morning, we started hearing rumours from other unions that AMCU weren't going to sign. When we approached AMCU, they were not making any kind of comment. They were here, they said, just to take part in the debate and the conference and the signing ceremony. It turns out that they didn't sign. And we heard two versions as to why that was. When we spoke to the mining minister, Susan Shabangu, she said to us it was because AMCU didn't have a mandate. Now, that was quite strange because the document that was released to all the parties about 3 weeks ago was fundamentally the same document that they had on the table today. No change to it. So whether we're not sure why the minister had to mention the fact that AMCU were looking for another mandate. But the bottom line is that they have agreed that they will sign that document, but it's going to take them about a week. So the other story we're hearing is that it might have something to do with AMCU saying that they want some of their workers or their members reinstated in one of the mines where they were recently retrenched before they'll actually sit down and sign that document. But Susan Shabangu, the minister, said to us, this is not going to slow the process down. AMCU will come up and get on board as soon as they're ready to sign, but all the other parties are going to move forward. Rahman?
Indeed. Break down this stability pact for us. What exactly does it bind mining companies, unions and governments to do? What are the KPIs?
Well, let's just take a step backward slightly. There's nothing new in this sustainability framework that's been put in place other than, and I'll get into the detail, the fact that each of the parties is now committed to each other. So if one party fails to live up to their end, and it could be around transformation within the mining companies, it could be around developing these settlements around those mines and making them more habitable. It could be to do with respecting other unions' activities and not trying to interfere and get involved in illegal activities. It could be a whole range of issues, for example, upgrading living conditions. So each of the parties has undertaken to look and do what they can do to make this thing work. But it has been around for a while. The difference, as I said, Raman, is that everybody's now committed to each other, and there will be an element of name and shame. So if one party actually doesn't do what they should be doing, they can step in and name and shame. So that's kind of the nub of the agreement. And as I said, it's a 12-month agreement. It's not a sit down, sign and walk away agreement. They're all going to be working together. They're all in this situation together, as it were. Rama?
Indeed, a bit of mutually assured destruction, if you will, quite at play in South Africa's mining sector. Thank you so much for your time this evening. That's CCTV's Angela Coppola live in Johannesburg. Still in Southern Africa, the troubled Zimbabwean airline, Air Zimbabwe, is slowly recouping the benefits of a 50% reduction in its airfares. Passengers are slowly coming back after the airline's prolonged absence from the skies. Industry players have welcomed new fares which have made the national carrier more competitive and which are now giving its competitors a run for their money.
With a reputation for posting perennial losses, saddled with debt and operating an aging fleet in urgent need of replacement, Air Zimbabwe has long been the subject of ridicule. Problems came to a head in July last year when it suspended all flights. Earlier this year, it made a comeback, albeit on domestic and regional routes only, but found the going tough with intense competition from international airlines that are returning to Harare. The national carrier went for broke with the half-price promotion, which seems to be paying off. An emailed response to questions we sent states, "The response to the half-price promotion has been overwhelming. Due to the increased demand, we have had to increase our frequencies." That self-assessment might be overstated, but there is certainly more interest from the market.
We haven't seen the magnificent change, but inquiries are there, and I think with what they're doing now, they're more punctual, they're getting on time, there are no delays, there are no cancellations and all that, and I think that's what the traveling public wants. As long as Zimbabwe goes back to its normal ways, which they used to do long break, that they don't cancel flights, they fly all the time, people are going to definitely support them.
Despite the positive outlook, Air Zimbabwe still has a debt believed to be in excess of $100 million hanging over its head. There are also unresolved labor disputes involving hundreds of laid-off employees and a much-needed upgrade of its fleet.
All that costs money, which may take a while to generate. This half-price promotion is a market penetration gimmick which is set to expire at the end of September. In the long term, however, Air Zimbabwe might find salvation in a market that has largely been untapped.
Zimbabwe has been trying to encourage domestic tourism, but one of the biggest stumbling blocks has been the cost of air travel. The reduced airfares, particularly to attractions like Victoria Falls, should bring the concept of holidaying within the reach of more Zimbabweans. The forthcoming United Nations World Tourism Organization General Assembly in August should also provide another platform for Air Zimbabwe to continue rebuilding. Faraimwa Kutuya, CCTV, Harare, Zimbabwe.
Right, quick run through the markets now. Remember the optimism that we had seen coming through from investors about the Egyptian market gains of somewhere in the order of 5 percentage points? That's gone, as you're just about to see a flood of red ink right across the board. So far, on the main bourses we track here for you, the Nigerian all-share down by just about a quarter. The all-share index in South Africa pretty much in the same direction, down by just under a percentage point. The 20-share index in Nairobi providing only green numbers on the board, but in the larger scheme of things, doesn't really matter. Up by only a marginal percentage point there. And of course, Egyptian market down by just under a third. This, of course, should be a fairly interesting set of indicators moving forward.